Ismail, who is going to facilitate this session. Opeyemi, the floor is yours.
Good morning, colleagues, and thank you very much to the organizers of this session. It's my pleasure to be among vibrant and intelligent minds this morning to discuss all important issue to our existence, because it's a fact that taxation in any country should be one of the most important issue that every citizen of that country should be interested in. I hope you can hear me clearly.
Yes, I can hear you.
Okay.
And
Okay.
yes.
So when I was called upon to speak on this issue, I was very happy that, because we have a lot of miscommunication and, let's say, a lot of issues that have not been put rightly in our media these days as regards to taxation in Nigeria. And this is also an avenue for me personally to speak to colleagues on my understanding and knowledge of what the tax situation, or let's say the tax regime of Nigeria is as of today. It's my pleasure to be here. And to the organizers, are we starting immediately? Can I go on with my presentation, or you want to? Hello. Okay.
Please,
Okay.
yes, please go ahead. And if you have
Okay.
slides, we'll be happy
Okay.
to see them. Yes.
Okay. Let me. I have a slide.
Okay, what's meeting Nigeria?
Discussing mother, we should be ready to complete it in short notice.
Okay.
We're not discussing, but
By 11.
Hello. I'm trying to share my
Please,
slide.
yes. Okay, we're here. Wait, don't worry, just take your time.
Okay, thank you. Can you see my screen?
Yes.
Can you see my screen? Okay.
Yes, I can.
Okay, thank you very much. So we'll be speaking to understanding, the title of the presentation is simply understanding Nigeria new tax regime. And the basic question we'll be asking ourselves is what changed, who is affected, why it matters, and other issues that are very important to this conversation. So firstly, I would like us to look at why Nigeria actually need the change that we experienced in the past couple of months. So there have been a lot of yearning from Nigerians, all stakeholders within the taxation ecosystem. The government, the taxpayers have been agitating about multiple taxation, a lot of other issues, right, actually. But there's actually a consensus among stakeholders within the taxation ecosystem on the need for change. And I think that's what brought about the new tax regime that we have in the country today. But I would like us to go through the different issues that have actually been around the taxation ecosystem for a past couple of years before we have this change last year. So my next slide is now showing us what the different issues are to different stakeholders within the tax ecosystem. To the taxpayers, if we read in our news, we also see different engagements from taxpayers complaining about multiple taxation. And I believe colleagues on this platform this morning will also attest to the fact that before now, Nigeria were actually paying so much, a lot of taxes that we can't even account for. You know, an average Nigerian that is let's say a 9 to 5, or let's say an employee will ordinarily pay income tax. Also, if you go to supermarket to purchase goods, or you are actually engaging somebody for any service, you also pay value-added tax. You see people paying stamp duty, paying different. Those are the recognized taxes that we know, right? But you also find yourself driving on Nigerian roads, paying certain tax that you can't account for them. You go to certain states in Nigeria and they stop you and be like, you are going to pay certain tax, and you don't even know, those people that collect the taxes, you don't even know the legal backing that they have to collect those taxes from you. And an average Nigerian find him or herself every day paying those kind of taxes that we cannot account for. We also have issues of multiple tax collecting agencies where you see these agents, FRS coming, a bit now NRS coming to a person to collect tax. You see, for instance, FCTIRS coming also to get taxes. You see AMA coming to get taxes. You see some other private consultants who coming over and say they are consultants to either AMAC or consultants to the FCT administration here and there collecting taxes from Nigeria, which doesn't actually present us as a very serious country. Also, we have complex tax rules. I can assure you that a lot of Nigerians don't understand what our tax rules are. So people are just living their daily lives without understanding of one of the critical aspects of our society that should guide our activities and engagement and our earnings as Nigerians. We also have heavy compliance burdens on taxpayers. We have official corruption. We have a whole lot of other issues like that. So to the general public, we have a low tax to GDP ratio. We have clouding and opaque tax administrative system. We have investment unfriendly tax system. So a lot of all these issues, but most importantly to the tax authority here, let me also talk to one or two, is low voluntary tax compliance. Yeah. As somebody that engaged closely with the tax authority in the country, I know for a fact that we have, in fact, up to now that we speak, we still have less than 50% of Nigerians voluntarily paying taxes in this country. And that's a call for concern because it's not fair to those people that pay their taxes and where we see more than half of the population that are taxable, that are not ready to comply with relevant tax laws. And to the government also, the government from their own point of view, they are looking at the fact that the revenue generation in the country is shrinking, and they are looking for avenue to leverage the gaps in our tax system to mop up more revenue for the country. I think those are the basic, reason why we had to change our tax system when we changed it last year. So now my next slide we'll now be looking at what actually changed. What is the new change? What consists of the new tax regime? You agree with me that when President Bola Ahmed Tinubu was assenting to the new tax law on the 26th of June 2025, he assented to 4 different tax bills into law. And those tax bills were meant to play different role in the tax ecosystem. So we'll be looking at the different the acts now. Number 1 of them is the Joint Revenue Board Act. That is looking at how to strengthen the coordination among the tax authority. It's one key segment of our tax ecosystem, and is also meant to address one of the critical issues that we've mentioned earlier as the reason why we needed a change in our tax ecosystem. The second one is looking at the Nigeria Tax Act. That's before now, we have more than 50 different tax law in Nigeria, more than 50. And it's too much for an average Nigerian to understand. So there is need to bring all these tax law into a particular document where if you want to see something about income taxes, you pick the document. If you want to look at VAT Act, you look at the document. If you want to look at Stamp Duty Act, you look at the document. That all the different tax provision or laws in the country, you find them in that particular. It's just like a kind of consolidation of the different tax laws that we have in the country into one document. And the third one is the Nigeria Revenue Service Establishment Act. Before now, we used to have the Federal Inland Revenue Service up until 31st of December 2025. So the act was to reform the institution that is saddled with the responsibility of management of the tax system in Nigeria, but now is the revenue system in Nigeria. And it's also to expand the mandate of the revenue service in the country. And the last one is the Nigeria Tax Administration Act. So how do we administer our tax systems? What kind of tax is the federal government is supposed to be collecting? Which one is the state government is saddled with the responsibility? Which one is the local government is saddled with the responsibility? So that's also to explain better to Nigerians so that there will not be a kind of fusion among collecting agencies. You already know what you are supposed to do. You know where the limits of your mandates, you know the scope of your assignments as a tax authority. Those are the four broad laws that made up the new tax regime. So, but I would like to discuss it one after the other. Yes, I've explained it briefly, but it's also very important that we look at it and understand it better. So this Nigeria Tax Act, like I mentioned, it consolidates Nigeria previously fragmented tax code. Like I mentioned, like we have more than 50 tax laws before now in different documents passed at different times. Some of them obsolete, some of them are no more, I mean, in fact, almost all of them are no more relevant to the current reality of the country. And in the face of advancement in technology, when we still have our laws that doesn't align with the current reality of our citizens, it's a disservice that the country is actually doing to the people and also to itself as a government or a country. So it makes it easier for business owners to understand their obligations and reduce the confusion created by overlapping laws. Yeah, there are some of the laws too that you see Federal Inland Revenue Service struggling. And at some point, I don't know if most of us here remember where the Nigeria NIPOST and the Federal Inland Revenue Service actually were engaging in each other in legal battles on whose responsibility to collect stamp duty here and there. I think that was one of the problems that those kind of fragmented tax code cost Nigeria during that period, where you see government agencies that are supposed to be collaborating and partnering to deliver were actually in a battle to take ownership and understand what their different mandates were. So the next slide will be speaking to what we call the Tax Administration Act. I mentioned it earlier, and the current reality of Nigeria and the globe and the world generally is tech-driven. And so far, as at when these particular acts were actually signed, bills were actually signed to law, we still have a large percentage of our tax system that has not been technologically driven. So now the tax administration has actually factored that into the draft before it became a law to consider how the different levels of administration of taxation in Nigeria can actually adopt, both at the federal, state, and the local level can adopt automation for taxpayers in filing their returns and reducing the delays and the manual paperwork that taxpayers have always been facing when it comes to the taxation system in Nigeria. So the third one, like I mentioned, is the Nigeria Revenue Service Establishment Act. And like I mentioned, it replaces the Federal Inland Revenue Service that we used to have. And this time around, this particular agency of government now has been saddled with the responsibility to manage both tax and non-tax revenue of the government with better and greater accountability. So we also have the last one, which is the Joint Revenue Service Revenue Board Establishment Act. Before now, we used to have what's it called? Is it JTB? Yeah, we used to have JTB, but now Joint Tax Board, but now it's now Joint Revenue Board Establishment Act. And this also has a lot of changes in the structure and the mandates of this board. It creates it's a kind of coordination mandate that this particular act is playing over the entire revenue ecosystem of the country, and it's also meant to address one of the biggest, like I mentioned earlier, frustration of businesses, which is multiple taxation. You know, when there is proper coordination among revenue bodies from top to bottom, right from the federal down to the grassroots, you know, there will be understanding of what the different revenue agencies' responsibilities are, the mandates, and there cannot be duplication of functions in that regard, because everybody will understand what their scopes and their mandates entails. And it's broader than that. I think as we go further in the presentation, I will identify some of the key changes and some of the landmark introduction in some of these acts. So the next thing that we'll be looking at is what really changed in these things. Because before now, we used to have tax, like the different tax laws, like I mentioned earlier. We used to have FIRS also doing its things. We used to have the Joint Tax Board that were also working Act 2. But what have changed in this of today? So we'll look at the NTA first, that's the Nigeria Tax Act, Act. And if you look at your screen, before now, we have, I think, three, we have like three different laws guiding income tax in Nigeria. We have the company income tax, we have the personal income tax, and we have the what we call CGT, I think, capital gain tax, right? Yeah. Those three different acts, I can remember now, were actually meant to play different role to collect or to guide the different incomes of different categories of Nigerians. Number one, for the company, that's looking at the corporate bodies, the companies in Nigeria. For the personal income tax, it's looking at an average everyday Nigeria that is an employee. And for the company income tax, is looking at investors, people engaging in capital, sales of business, sales of properties and assets, and all of those. For the company income tax, there is a different law that guides their operations, that guides the taxation of that particular segment. And then, before the new tax law comes into being, we used to have 20 to 30% percent charges, rates on companies as their company income tax annually. For 20% is for companies that their annual turnover is less than 100 million as at then. And for companies that their annual turnover is over 100 million, you pay 30% of your profit. Take note, profit, not income, right? So for now, it has unified, the new tax act has unified the three what we call income taxes that we talked about. Is now in one document with different categories, where an average Nigerian can just pick the Nigeria Tax Act and look at the income tax portion of the act and see everything that has to do with company, personal, and also the capital gain tax. So we also have another aspect that was included. We talked about the fiscal provision on upstream petroleum and gas operation. Yeah, you know, the PIA, that's the Petroleum Industry Act, Petroleum Profit Tax Act, all those ones we used to be different documents, right? Has actually been consolidated now and is now in one document. So now we now have the Nigeria Revenue Service now in charge of coordinating the collection of taxes in that regard, not necessarily taking over the responsibility of the other agencies that have been scheduled with the responsibility to do that before now, but to coordinate to ensure that there is no leakage in revenue collection in the country. And also, the value added tax of the country has also been simplified in comparison with what we used to have before now. Also, if you look at the detailed portion of this presentation, it's a simplified value added tax regime made neutral of business profitability. So in this instance now, you can see a lot of under the VAT categories before now, you see companies who have been charged to collect with the responsibility to collect VAT on behalf of the the government, certain companies. But in these new tax acts, there are actually provisions of the acts now that has actually relieved some categories of companies from doing that. If your turnover is up to a particular threshold, you are not saddled with the responsibility to do that for the government. So it's also one of the changes that has been introduced. We also have the stamp duty, which has now been simplified with clear, concise provision and imposition of stamp duty synchronized with VAT, especially in real estate transaction. We also have tax expenditure where we have certain reliefs for industrial development and all of those. So for personal, let's not talk particularly to personal income taxes. So like I mentioned earlier, there used to be different laws in charge of guiding the personal income tax of Nigerians before now, but now is now captured at Nigerian Tax Act. So this details is now talking about how that particular, the changes has harmonized the deduction of the different statutory deduction from income, like our pension, health insurance, national housing fund, housing loan interest, and the rent. It has actually harmonized them as statutory deduction before tax, So it has also simplified tax rate band. Before this new tax law, the lowest of the lowest in our society were actually paying taxes. But starting from the end of this month, a lot of Nigerians can actually also attest to the fact that what they will be paying for the low income Nigerians, some of them will not even be paying at all. Most of them will be paying lesser than what they used to pay. I think in terms of business, personal income now, emphasis were actually now, more taxes will now be generated more from the high income earner in our country, because if you look at the band of that has been the band that was designed in this particular act now, if you are earning less than 800,000 naira annually, you will not be paying any form of tax. You'll be charged 0% at 0%, and that means that 800,000 naira is after the statutory deduction. I've seen arguments around people that are earning 70,000 naira, which is the minimum wage in Nigeria, will also be paying taxes. But that's not true, because if at the end of the day you look at those different deductions we mentioned earlier, and you realize that their annual earnings will actually now be less than that 800,000 naira, and you see a lot of them not paying any form of income tax in coming years. So also continuation, okay, I think it's the same, sorry. So continuation of that is also under the corporate. We have the corporate tax too. I mentioned it earlier, that income tax comprises of the income, personal income and corporate income, and CGT and some other ones. But under the corporate income tax, we have two classes of companies now. We have the small and large. And now the threshold of small and large of small companies have been increased from 25% that it used to be in the previous tax law to 100. So in some documents to 50 million, and in some other documents it's 100 million. And I think in the coming days we'll see FRS coming up with a guideline to show Nigerians on which of the figure or threshold is being adopted for implementation as we move ahead. So the small now is between 50 to 100 million, but as far as I am aware, I think it's still 100 million and below for small income, and for large income it's going to be over 100 million and above as annual turnover. But the most interesting thing of this is that small businesses will now not be paying company income tax again, because now it means that if your annual turnover is less than 100 million, you'll be paying 0% of your profit as tax, which is very, very commendable, because you now see businesses thriving. Small businesses will now be given breathing space to grow, and to also have more savings for them to invest more in their businesses. Also, we also have the part that talks about the qualifying capital expenditure. This is talking about the capital allowances, because as a business also you have some form of allowances even in the previous tax laws, but now new assets now has been introduced, like power line, telecommunication tower, and aircraft has been introduced as qualifying capital expenditure that you can earn capital allowance from. Capital allowance is the kind of allowance that you earn from assets that you purchase for the operation of your business as a company. Before now, as a company, if you buy a vehicle for the company for the usage of the operation of the company, you get your allowances. The government return. You are investing certain amount of your money into that. The government will return back those monies you use in those purchases to you in form of capital allowance. And now they've introduced more assets in that regard. So now we don't have 20% capital income tax rate again. So because less than 100 million annual turnover is paying 0%. So from over 100 million annual turnover will now be paying 30% of their profits as capital income tax. Okay, now donation. Before now, donation in cash and kind were not allowable expenses, but now it has been allowed, taken as allowable expenses for corporate businesses. Also, generous provision for allowable R&D has also been granted in this capital allowance. So some of these things, a lot of people in business should know this, and that's why I will also advise that Nigerians should take more, to invest more in learning on some of these finance and tax issues for proper management of their business. I think one of the problems that we're having is not really that the system is too rigid or something. It's because there's low knowledge and understanding among Nigerians as to what they can also benefit as businesses when it comes to provision of the law. We have the hydrocarbon tax, 30% of all. We have the global minimum tax. So these are some of the changes that we have in the new tax law. So let's, because of time, let's proceed to the administration of the Tax Act. Under this one, we have relevant tax authorities where they are, I mentioned earlier, their scope of operation will actually be clearly defined in the Act. We also have the channel of collaboration among tax authority, which has also been clearly stipulated in the new Act. How a taxpayer should register with the different tax authority is also clearly stated in the new Act. Possible to how a taxpayer can also be deregistered also has been captured. So if you take the Nigeria Tax Administration Act, all these things I'm mentioning are things that have been included, or let's say revised, that if you look at them, you will see changes is what it used to be and what it is currently. So the tax agent now, one of the problems that tax authority also face is that a business will because everybody just call themselves, I'm a tax consultant and this and that. When a business owner doesn't know what to look for when they are trying to engage tax consultants to represent them with the different tax authorities. Anybody that comes forward and introduce themselves as a tax agent will just be given the opportunity to represent. And at the end of the day, most of them are even the reason why the tax authority face these many challenges that they face in terms of tax collection and administration. So now, the relevant tax authority are now going to be accrediting tax agents, based on maybe qualification, based on experience and all of those. I don't know yet, but I think in the coming weeks or months, the tax authority will come out with guidelines on how to accredit tax agents, so that Nigerians will actually be at peace now to say, okay, whoever is representing a company with the authority will know that these are qualified people that has been accredited by the relevant tax authority. We also have the aspect of tax refund. There is this part of the tax laws that people don't really understand, which is the tax refund component of it. So as a corporate body, you are entitled to tax refund depending on some meeting up with certain criteria, you know. So if you look at this new tax act, you'll be able to see what criteria, what make you qualified for tax refund and all of those. All these things are happening in other climes. So now there is now a structure and a legal changes to what it used to be before now, what it is now. Because before now, the tax refund mandates of the tax authority has been bastardized, where you see different people doing different sort of things. But now you can look at it and see that these are clear guidelines that you don't need to even engage with professionals for you to actually understand. And now we also have the part of technology, where relevant tax authority are also allowed to use technology for the administration of tax in Nigeria and all of those. So the tax return also is now supposed to be where you can file your tax return, and the date for filing tax return now has actually been harmonized. So you not have 21st of the month for one tax, this one for the other tax, and all of those. It has been harmonized in a way that with a glance of the tax administration act, you'll be able to see what time deadline is given to taxpayer to file their returns. So the next slide is looking at, okay, this is when we're looking at the establishment of the Nigeria Revenue Service. You know, it used to be FIS, like I mentioned earlier, but now it has given a national coloration now. It will be federal before, but now it's a national because it cuts across federal, state, and local government now. It's a broader mandate. And the function now also includes that the NRS can also assist or support state and local government to administer its taxes, you know. Also given the responsibility of issuing regulation, not as in the previous law, it used to be the board that gives regulation, but now the NRS can give regulations to the administration of tax in the country. So governing board, now there are different changes to the governing board of the NRS too. We used to have NNPC as part of the governing board of the FIRS, but now NNPC has been removed. Now they've included Ministry of Petroleum and executive directors. There is also the regional representation that is not more mandatory. It used to be mandatory also. And board members also are subjected to conflict of interest disclosure. As a board member, if you are serving, if you have a company that is under, you need to tell disclose that you have a conflict of interest in particular cases, and you'll be excused from taking major decision in that regard. So because the structure of the NRS has changed, the management committee has also changed to include executive chairman and the executive directors. It used to be the coordinating directors, but now they've changed the nomenclature to executive directors, and it's one of the changes. So they've created like I mentioned, created the executive director position, yeah. So funding is 4% of total revenue collected. That's the cost of collection, I think. And I think there's also going to be changes to this in coming days because of. So exemption from income tax. So, you know, as FRS that, you know, they are exempted from income tax. Not that FRS staff don't pay income tax, but FRS is not a company that can pay income tax. So they are exempted from paying income tax, but they are charged with responsibility of as agent to collect relevant taxes for the government. If that is not clear, I think participant can ask a question around that, but because I don't want to be misquoted. Not that the staff of the NRS are not paying taxes. They pay their personal income taxes, in fact, deducted at source. But it's saying that if NRS as an institution doesn't pay, they don't pay income taxes based on what comes in for them, because what comes in for them is actually the cost of collection that they use for the management of so they cannot pay income taxes from that, because it's also used to drive the administration of the entire agency. So the next slide, continuation of the NRS Establishment Act. We have technical committee. Technical committee consists of the executive chairman, the executive directors, and 2 other board members. Director of Tax Policy and Legal Administration. Those are the people that consist of the technical committee. We also have the confidentiality of taxpayers. Before now, it's not this stricter, but there is stricter rules now and penalty for unauthorized disclosure of taxpayers' information and recovery of unremitted tax tax by government. So Accountant Generals under obligation to deduct from allocation and remit to the relevant tax authority or body. So the Accountant General has been saddled with this particular responsibility. In case we have any government agency or establishment that is supposed to pay particular or remit a particular tax to the tax authority and they refuse, the Accountant General has been saddled with the responsibility to deduct from source from their allocation and remit to the different tax authorities. So the next one is now the Joint Revenue Board Establishment Act that I mentioned earlier. So the JRB established with their clear mandate, and the Tax Appeal Tribunal now, TAT, which is like a court of tax now, has been established under the Joint Revenue Tax. So that's where any tax payer that doesn't agree to the tax position that is issued to him or her or the company can proceed to the tax appeal tribunal for redress. It also has its guideline, that's its requirement, the requirement you must meet before you'll be able to access that tax appeal tribunal. We have they have jurisdiction on all tax matters, federal and state. That's the tax appeal tribunal. And now a new introduction now into the Joint Revenue Board establishment is the Office of the Tax Ombudsman. The Office of the Tax Ombudsman is like an independent adjudicator, kind of, that you come, the person is neither NRS or neither taxpayer, that is going to sit in between to resolve tax matters now. And this is also to prevent taxpayers and to resolve, disputes among taxpayers and the tax authority. Also to provide transparency and improve taxpayers' trust in revenue administration in the country. So those are the basic changes in the different tax laws that have been introduced. So now what it means for business now. What those changes mean for business is that the compliance environment now, in relation to the compliance environment, it means that we have a unified rule book. We have a book that, with a glance, a pick of a particular book, you can see everything that has to do with taxation in Nigeria. We also have consolidated return filing date. Like I mentioned earlier, the date for filing now is now consolidated. You don't have businesses distracted from their operations to engage in tax matters, and here and there they know maybe the third week of the month is when we will do our filing and all of those. So it should not be you file one particular tax in the first week, second week you do another one, third week. So it's a kind of distraction to businesses. So now it's consolidated. Now you know when you are going to be filing your filing of returns date. So oversight on tax, there's also oversight on tax authority operation now. Like I mentioned earlier, we have tax ombudsman, we have the joint revenue board. Also those different establishment now are there to oversight the work and responsibility of the tax administration across the country. So the next one is also to look at the investment and business part of the impact or effect of this new tax law. So income-based tax now reduced to only 2 because it used to be more than that. It used to be more than, I think, more than 3 or 4 before now. But now, because of this new tax law, it has reduced income tax only to small businesses are spared from income taxes. I mentioned that earlier. Reduced tax burden for most employees. I talked about this earlier as regards to income tax for people. Personal income tax is here, where people that earn less than 800,000 naira annually are not supposed to pay taxes, and reduce opportunity for non-compliance. So before now, like I mentioned earlier, a lot of taxpayers are not they are non-compliant to relevant tax law. So now stronger and deterring penalty regime have been introduced to non-compliant taxpayers, enhanced capacity of tax authority to enforce tax compliance, and legal framework for collaboration by tax authority. When we have states tax revenue authority that are not capable enough to do their job, where the National Revenue Service can actually now support them to to do that. So what it means for Nigerians generally, what it means for Nigerians now is that, well, there will be more effective tax administration. There will be also become more improved compliance, voluntary compliance among Nigerians. There will also be growing economic. The economy will grow more because there will be more. Government will generate more revenue from the leakage in tax collection that we used to have before that has been breached. But we also have progressive taxation where the more you earn, the more you pay in taxes. When the less you earn, the less you pay in taxes, or you never pay at all. We also have the new investment inflow because of the refined tax system now. It's expected that there will be new investment into Nigeria economy. Small businesses will also have to grow because they pay less in taxes, and they will save more for them to grow as a business. And poverty is also expected to reduce. And also to mention, before we round up this part of the presentation, is also that there are some exemptions also that has been introduced in the aspect of value added taxes for Nigeria. Those aspects of value added taxes have been exempted are the transportation components of your expenses. You don't pay VAT on them. You don't pay VAT on transactions on agribusiness, technology, manufacturing, some of those. So VAT are not to be paid on those ones. I think guidelines will come out to that, and Nigerians are also meant to support tax authority to ensure non-compliance, because if there is law that says you should not be deducting VAT on certain transaction, and you find businesses doing that deduction, it's also the responsibility of Nigeria to report those kind of non-compliance to the tax authority, and those kind of businesses can be penalized accordingly, because it's more like ripping off Nigerians. And end of the day, it will just the news out there will be like government is collecting taxes from Nigerians. But Nigerians don't have the understanding of the kind of businesses that they are not supposed to be paying VAT on. But I believe more sensitization and awareness will also be introduced by the relevant tax authority to enlighten Nigeria on what to look out for and what not to look out for when they are purchasing a goods or services from different businesses in Nigeria. So I think briefly, and I believe, it's not, the conversation around taxation is not exhaustive. I know there will definitely be questions around some of those things that are not captured in the slide. I'll be here to be able to respond to some of those questions. Thank you very much. And I think that's the end of the presentation. Thank you.
Thank you very much, Opeyemi, for this very, insightful presentation on what Nigerians should look out for. You have clearly helped us understand what the whole tax regime is about, why there was need to, for the lack of words, maybe re-strategize or improve the policy to see how to accommodate more people and how to ensure that that people who are not compliant begin to pay their taxes in Nigeria. And somehow it's from this explanation, there's a sense of relief knowing that, yes, of course, we all understood that there were some people that would be exempted from tax, from paying tax, and then um, earning and low income earners would also be exempted from paying tax. Now, for me, I don't know if I should go ahead with, because I actually have a question. Having understood that, having understood the whole concept and the reason why the government has decided to, you know, re-strategize and improve the tax era and the tax regime, so that Nigerians who are unable to pay would start paying, and those who ought not to pay would be exempted and not pay tax and all of that. So the first question, how can journalists report on it to rebuild public trust? Because aside from understanding the reason why this happened and what what Nigerians start to benefit, we need to also understand how journalists can then play a role in this whole process, because as the fourth, as the as major players, because I know that journalists are major players when it comes to public sector, public engagement in Nigeria. How do journalists now come in? How do we report this to help build rebuild public trust? And then how can the media better hold the government accountable on taxes? Because it's not just collecting the tax. How are the tax used? How is it being used to improve the system, the country? So we need you to help us understand, this whole process and take up on the questions and all of that. That's my question. And then the floor is also open to people who want to ask questions. Please, if you have other questions, please kindly raise your hand
Can we take this
and
one after the other?
you'll be
Hello?
unmuted to speak. Sorry?
Can we take it one after the other? Let me respond to this. If anybody we can continue to converse in that way. I think it's better for me
Oh,
to.
okay. Okay, that works.
Okay.
That works. So please respond to these, and then if you have more questions, would take it up from
So,
there.
so I think the first thing to build trust is, transparency is the key. You understand? Transparency is the key. So I think the first thing that journalists need to do is to advocate for transparency from the tax authority on what the different taxes are, the guidelines. The guidelines are not meant to only be for the usage of the tax authority, right? Journalists can start from beyond the law, because the law now has empowered the tax authority to develop guidelines to administer taxes and all of those. Now, we can now go further to say, okay, we can engage with tax authority to request for some of these guidelines, study them, seek for clarification where we are not clear on some of these issues, to be able to have a clear understanding of what is happening from the back end. Because not everybody can have access to, say, not everybody can walk into the NRS, for instance, now and say, I want your guideline, I want your guideline. Yeah, there's also the part of FRS now, NRS now, putting that on their platform that everybody can go there and download. It can also form part of the advocacy to say, see, all these guidelines that you use in admission, some of your taxes and collection and everything, administration and all of those, can you make it publicly available to Nigerians? And while the journalists now will do the work of sensitizing and Nigerians on what those things actually meant, because not everybody that reads understand, right? So, and because the journalists have the third, the fourth, is the arms of government, like they used to put it, like they are saddled with the responsibility to actually sensitize Nigerians, make them create an environment for them to be aware of things that are happening around them. So I think we can start from there. And also, our reporting should not be sensationalized. Like, let's work based on facts and not writing or talking about things because we want followership or we want people to, because I'm not saying, I know I've worked with journalists, I work with a lot of journalists, and I know that we have a lot of good journalists out there that are doing the work rightly, but we still have some people that are not properly trained to be journalists, and we see them out there calling that journalists. Those are the kind of people that spoil the work of journalists. So if we start from engaging with the authority, getting the right information to work with, and when we are writing or we are speaking on these issues, we speak with facts and figures and not sensationalizing issues and based on one person that did something, and we now start generalizing issues and say this is what is happening. And also to track where the money goes, because all the money that FRS collects goes into the federal government account. FRS or BNRS don't have the money in NRS. It goes to the government, and the government now allocates what their cost of collection of NRS is to NRS. So now, where the money go? Where does the money go? How is the money being used? And before I forget, there is also this conversation around VAT when the argument of passage of the laws was ongoing, where Nigerians were like, it should be where the goods or service has been consumed. That's where the VAT should be, captured, and all of those. Because before now, let's say we have MTN headquarters in Lagos now. You will not, all the data that we use, all what's it called, core credit that we use as Nigerians across the country are captured under Lagos, as Lagos collects, for VAT, for instance. But now, this tax law now has actually relieved that a little bit, where they divide it into percentage, like 20% of some of those, in terms of sharing now here. So, but now we have consumption per location now as we capture under which, for instance, if we have, let's say, 1 million people consume credits, MTN credits in Abuja, it will be captured as 1 million people VAT earned for Abuja. It will not be for Lagos as it used to be. So that alone also look at how viable a state is, and what potential the state has in terms of revenue generation and all of those. So all those information, people don't have it out there. We need to also start explaining some of it, and also to hold government accountable. If year in, year out, we say our revenue is increasing from so trillion to so trillion, are we seeing value for the money collected from Nigeria from those collections? So journalists need to hold government accountable for the taxes that Nigerians are paying. While they encourage Nigerians to also comply with the tax laws, they also hold government accountable to the usage of the particular tax they are collecting. And also, I think, like what we are doing today, we don't just call, not everybody can speak to issues, right? There are some issues that are not general issues, that they need to be discussed with professionals, right? So when we, as journalists, now start looking at that part of our conversation by bringing in experts to talk on issues with us, and not anybody that's just interested in speaking. Everybody is a public commentator now, so anybody can just come on the platform and say whatever they want to say, and that contributes to what we have as misinformation today. So what we can do as journalists also is that when we are bringing in our resource persons, we should look at their profiles, look at their antecedents, look at what they've done, look at the areas of their areas of interest and what they've done in the past as regards to the issues, for us to be able to engage them to and believe that they will not be biased and misinform Nigeria on the issues that we are about to discuss. I think I want to stop here and take more questions. I don't know if this answer your question, okay, as regards to what journalists can do to improve this. Thank you.
Thank you so much, Ismail Opeyemi. Yes, I think it's to a large extent you responded to my questions. We have two hands up. We have one from Yahuza and from Opeyemi, but we'll take Yahuza first because his hands has been up. So Yahuza, please unmute yourself and ask your question.
Okay. Good morning. Thank you, Oge. Mr. Ismail, thank you very much for the session. It's very enlightening, and I think you speak in a language that is simple and also comprehensible. Unlike when we hear some professionals or experts, sometimes they speak with some ambiguity and jargons that not everyone could simply understand. Yes, so your session has answered a lot of questions I have prior to this meeting. But I still have up to 3 questions. So I'm a journalist. I work with Social Voices. So we have engaged people who run small businesses regarding the tax. So, and as a result of some of our conversations, we learned that a lot of these people, like you mentioned too, don't have access to the information about the tax, and this is how they are going to benefit. So most of what they have access to is the misinformation that has been flying there and what some journalists and media have already put out. So my first question is, from the government side or the tax authority, what is it doing to see that it's create an engagement between traders, small traders, to educate them on the tax issue? And then also, some of them mention fear and confusion regarding formalizing their businesses. So they say that like when they restart their businesses, the government will be monitoring it, and they don't like that. So what could you also say in regards to that to encourage them to do that, and what benefits is there for them if they formalize their business by registering with CAC and other relevant things that they should be doing? And also regarding what you mentioned about multiple tax collectors, I think it's one of the issue that a lot of them kept repeating. So now, well, this is the new law, but sometimes what will happen on ground will be different with what the policy say on paper. So is there an avenue where if people who are not accredited tax collectors come to them, is there an avenue where they can report or ignore such demands? Thank you.
Thank you very much, Yahuza. And I mean, yeah, it's the country we find ourselves. But let me speak to the first question you ask. Yes, the government need to do more in sensitizing Nigerians on this new tax law, and what's the benefits are to an average Nigerians. Yes, they are doing a lot currently. In fact, I got tired at some point. Anytime I switch on to any channel, today if I'm on Arise, I will see them talking about tax. Tomorrow, and they are bringing people. Especially, I've been seeing Taiwo Yedele on the television for, I mean, almost how many months now, and I've started to get tired of Ismail. People want to kill this man, but the responsibility is not only on Taiwo Yedele. The responsibility should be everyone's responsibility, and I think I believe and I know actually that the revenue service now are working around doing a kind of train the trainer kind of package for Nigerians, where maybe, for instance, they identify some journalists now, invite them, train them on the new tax law, while those journalists now go to their different platforms too and speak on this issue as they have been trained. That should not stop there. It needs to go back to the grassroots, not only talking about it on television. When we go to the rural communities, how many of these rural communities have access to electricity to power the television? We can also consider other channels of communication like radio. I mean, those are things that the tax authority should leverage on, radio or community engagement. Like 774 local government is not so large that the government cannot engage people from different local governments to engage with tax payers within those local governments in terms of sensitizing them on the real information that they should get to work with. Yes, the government they are doing a lot currently, but they need to do more. They can explore other channels of communication, engage more people that have wider reach to the grassroots to help speak on this tax matter. Secondly, we talked about the issue of how small businesses are scared. And that also brings us back to the issue of misinformation. I would, for a fact, I'm speaking as somebody that have engaged with taxpayers, that have engaged with also the tax authority, and I've seen firsthand how misinformation have actually made a lot of small businesses to lose so much money that they are supposed to enjoy from government, even in the previous tax laws. So let me explain something briefly. You know, as a small business, right, that is registered with Corporate Affairs Commission, there are a lot of opportunities. There are a lot of incentives for business that are registered. Apart from the fact that you will be a corporate body, both gain and profit of the business now is for the company, not as an individual. But because as a Nigerian, we want to be in total control of our business. When they talk about, let's say, for instance, they talk about a particular business, I want it to be me that they are talking about, you know, that doesn't represent what businesses should be, right? So if you have CAC and the name of the business is, let's say, Bits Limited Company, right? Everything that happens in the business is big. They don't know. His directors are just for decision making. The business is the business. So, but before you calculate your, I talked about the threshold earlier. But before you even calculate your profit, the process you go through before you calculate your profit. At least as a business owner, let's say you are into production of gari, for instance, you remove the money that you used to buy your raw material first. You remove the money you used to buy to pay your workers first. You remove the money, everything that you use in production, you remove the money first before you calculate what your profit is. In some cases that as a company, you have bought some assets. We call it capital allowances. Let's say as a company, you bought a truck that you are using to deliver your goods. The government will be returning back that money you used to buy that truck for you before they will be deducting, they will call it capital allowance, certain percent of your accessible profit before removal of tax. They will be removing it bit by bit, depending on how much profit you have in that year. If the profit you have in that year is enough for them to give you the entire money you spend in purchase of that vehicle, they will grant you first before they calculate what your profit is. At the end of the day, a lot of businesses that understand how to play around tax, how to play around expenses, how to play around cost of sales, they know how they do these things. So that's why I said it's good that every business has somebody, a professional that advises them on what to do, how to do them, because one, you need to keep proper record. Nobody in the world is saddled with the responsibility, who is given the authority to start deducting money from somebody's account without authority, except it's statutory. Do you understand? Or maybe they've placed a lien on your account that you cannot withdraw based on maybe you have committed a particular crime and all of those. But sincerely, the information out there, anytime I hear them, I'll be like, no, this cannot be now, for God's sake. So we need people to learn more on these things for them to be able to know that there are other opportunities for us. And also, for businesses that engage consultants, right? Businesses that you work as consultant to other people, most businesses don't know. For instance, let's say you are a consultant, you have a consulting firm, and you work for certain companies, consultancy. They deduct withholding tax. Withholding tax is not a form of tax. It's just a part payment of your income tax. Let's say they remove 10% of your service charge. Like I'm to be paid 1 million, and they remove 100,000 naira as my withholding. You know that 100,000 naira is being paid in my name to the revenue collection agency, so that when I'm ready to pay my tax, they will just deduct that 100,000 naira from the tax I'm supposed to pay. So, but if you don't have proper record and you don't do follow up with some of these people that deduct withholding from you, some of them will deduct withholding, they don't remit it, and it affects you at the end of the day because they've remit it, you are still paying it, and it's not the responsibility they don't know. It's what they know, that they will be able to say, okay, you have this certain amount of credit notes, so we'll remove it from what you have to pay, and you pay less than what you used to be. A lot of things that if you know, you even know that it's better I comply because it gives me more opportunities. Because as a business, there are certain things you want to buy. If you want to go into contracts now, if you don't have your tax clearance up to date, you cannot get the contract. If you want to buy land, if you don't have your tax clearance as a business, you cannot buy the land. There are certain transactions you want to go into. If you don't have tax clearance certificate, you cannot go into them. So it's better you know that thing so that you know how to manage your operations in a way that you will not, because, okay, now for organizations that the law has mandated you to collect VAT for the government and you refuse to collect. If you refuse to collect that VAT, whether you like it or not, you are going to pay that VAT to government before you get your tax clearance. So you need to know that, these are the transactions that I need to collect VAT from, and I charge it with my cost, the cost of that particular product before I sell, so that when I'm remitting from what I've collected, not from what is supposed to be my own profit. So some of those things are actually information or knowledge thing, not necessarily that the system is too rigid or strict for. I think that's the second question. The third question is about what's that again? Yauza. Okay, do you remember the third question? Hello.
Hello. Yes, I can hear. I think Yauza should help ask the question again.
The
Yahuza,
third question.
are you here? Hello, Yahuza. Okay, so while we wait for Yahuza, maybe
Yeah.
we can get are you done with the responses? The
Yeah,
ones
except the last. I know there are three. I know there are three questions
questions.
you asked. So I can't remember the last one. So I
Okay,
know
so
I'm
I
done with
think
the first and second.
okay.
We'll wait
So
for
maybe
him now.
Oyeyemi, your
Let's
hands were
take
up.
other.
Oyeyemi, can you hear me?
Yes, I can hear you. Okay. Thank you so much, Mr. Opeyemi. Thank you. Okay. Thanks for the clarification and all of that. So you also took the first question out of my mouth about clarification. But then I have this other
So
question.
Oyeyemi, sorry, please. I think I remember Yahuza's last question now about the agent now. He's saying that how do you know that this particular person is an agent of?
Exactly. That was the
So
question.
so what I was saying in my presentation was not. I was talking. There are two things about agency, right? The agent of the revenue collection agency, that one is different. And the other agent that we were talking about earlier is supposed to be the agent of the taxpayer, that like the representative of the taxpayer with the tax authority. Because the tax authority knows that a lot of taxpayers don't really understand some of the tax concerns, right? So they are allowed to engage a professional to represent them, not totally. They can also be there in all their meetings. They can always be there for somebody that can guide them on what is obtainable, what the law says, what the laws that can guide them on what is obtainable as in the law and how to go about the conversation. So for the tax authority now, every tax collection agent will definitely be a government. In this new tax law, every tax collection agent will actually be a government worker. Like you are working for the government to collect tax. Do you understand? In the case that it will be you are engaging a consultant, which I don't think I think with the conversation I've had with a couple of colleagues, I don't think that's going to be allowed going forward. Where you just see nuisance on the road harassing you to collect taxes, that definitely will stop with this new tax law. So anybody that you are seeing a professional coming forward to you to say, okay, can we see your document? Can we see your papers? And information actually guide the decision of tax authorities actually. A tax authority cannot just come to you and say, you are supposed to pay so amount of money as your tax. They've seen certain information. And he talked about something earlier about people they don't want to be corporate because they think government will be looking into their things a lot. I won't lie to you. With the adoption of technology, government have access to all your information. So, but the information now, for instance, now, as a tax authority, somebody that work with the NRS, they can have access to what comes into your account every month. And if they look at it, and there is no proper, that's where the description part comes in, right? And they look at the description and they don't see anything like, they know what they are looking for. So whether you describe or not, they will still pick what they want to pick in your transaction. So it's just for you as a person to keep your record. For instance, you are engaged for consultancy as you don't have a contract agreement to sign with that particular company and they send you money. You understand? At the end of the day, if you have a contract agreement, it will be captured in that contract agreement. I see the amount of money I collected for this contract. You will show it at the point of reconciliation, or receipt for purchase, or you went to buy something, you don't collect receipt. All those things you keep it. Or as a business, you need to keep your record. You need to have your ledger. You need to have your do your proper account at the end of every year, so that at every demand for document, you have something to present to the tax authority. Say, oh, these are my documents, these are the transactions, these are my flight ticket I booked for a particular trip. This is that relates to your business. So all those things will be allowed, deducted before they calculate your profit. So I think that aspect of it is clarified. I just remember now. So let me add it to the conversation we've been having.
Okay, thank you so much. Okay, yes. Please go ahead.
All right. Yeah. So, like I said earlier, Yauza asked the major questions I wanted asking before, and I've gotten clarification on that. But this one. Okay, some workers, especially private institutions, have been complaining of recent that their salaries has been deducted, like no, has been reduced because of the tax new tax policy and all of that. Like for someone that is earning like 150,000 before the new tax law, the person's salary reducted by 20%. So I've been wondering, is it that the workers are the one that will be responsible? Because when they asked for clarification from the organizations said, oh, they are paying tax now, so money will be deducted from their salaries and all of that. And most of these people have they've been lamenting. So I mean, since we have here, I mean, can you clarify that is that the proper thing to do for organizations to deduct and remove reduce their staff salary, their worker salary because of the new tax?
Yeah, thank you. Thank you for the question. So, but I would like to tell you that any deduction from any worker salary before the end of this month, I don't know, please, emphasis, any deduction from any worker salary before the end of this month or this January month that we are in is actually not in compliance with the new tax law. Because the new tax law, as regards to personal income tax, come to effect from January 1st, 2026. And I want to believe it's 21st of January. I don't think any organization has started paying its worker salary by now. So, except they started collecting salary before 20th, which I don't believe any organization paid before 20th. So, any deduction from previous December, November, since they signed into law, I think is not in compliance with this tax law. And such a business or employee can actually report such organization to the appropriate authority, because clearly I don't know what's happening in that organization. And again, for some organization before now, because I also worked in the private sector, I've worked with organizations that they don't deduct. There was no deduction in our salary. They pay us our salary. It was wrong in the first place because they were supposed to be deducting payee from us to pay to the relevant authority. But because they don't want to, I don't know what their reasons are, which means they've been doing illegal things before now. But now that the new tax law has come and strict on people that have not been complying before, maybe some of them want to come legal now. They want to start doing what the law has provided now. Then that will now affect the salary of worker. But it's actually not supposed to even affect the salary of worker, because in the contract that the worker have collected, that they are in contract that they signed with that particular company, is not stated. If it's not stated that 150,000 naira before tax, 150,000 naira after tax, if it's not stated there, then you can also contest it and be like, no, you cannot deduct from my salary because the contract I signed with you says so, and so. So it's also an issue of knowledge and understanding of what the law says, and also knowing our rights as Nigerians too. But I can assure you that whatever reduction that has happened before the end of this month in worker salary is not in compliance with the new tax law. Thank you.
Thank you so much, Opeyemi, for that very good for the explanation and response to the questions. I think I saw Oluwakemi's hands. Okay, Oluwakemi Adelagun, you raised your hand. Please proceed with your question.
Hello. Good morning.
Good
Hello.
morning. Yes, we can hear you. Go ahead. Good morning.
Thank you to the facilitator for the detailed explanation. And then I would like to ask, how can this tax exemption help female traders like the woman trader in Balogun markets?
Hello, can you come again, please? I didn't get that.
Yeah, so I said, how can this tax exemption how can he help, for instance, the woman trader selling, trading at the Balogun market in Lagos? So I'm just trying to explore the gender perspective as regards the tax exemption. I don't know if you get my question.
Yes, I got your question. I got your question. So because somebody in Balogun market now, before now, used to pay daily taxes to put whatever their stuff is at a particular store. And because there is the multiplicity of taxation has actually been addressed in the new tax law, it's going to reduce the amount of money they pay in taxes, and it will also increase their disposable income as a business. Because, for instance, before this new tax law, like let's say 11 tax agents comes to you a day to collect 1,000 naira. That's 11,000 naira per day, right? Removing that from what you earn from that business on that day goes along to affect what your disposable incomes are. But because there is now a tax law that guides taxation in the country, where some of those tax collections are no more in existence, and maybe now you have to pay just, let's say, 3 or 4 thousand naira statutory rate or grant per day. Now it reduces it increases what your disposable incomes is as a woman, and also you can also use that money now. And you believe that some of these women now has daily adjust that they do, monthly contribution now. By saving those money now, before the end of the month, now that money translates into big amount of money that you can use to increase the capital of your business as a woman to grow your business. Also, because an average woman is the caregiver in the house, an average woman is the caregiver in the house, and going to purchase paying transportation now, because now the new laws also provide that transport is not inclusive. Now you don't pay VAT on transportation again. And a woman in Balogun transports herself to the market every day. And because she is not going to be paying VAT on that transport movement now, it also increases what she pays as transport, and also be able to save more to grow her business also. Food items also, removal of VAT from food items and all of those makes them to have more money in savings and increases their disposable income. Generally, I think it will improve the economic security and growth of female traders, especially like you mentioned, those people in those ones in the informal sector. Because what used to be the norms within their market spaces may not necessarily be the norms again. But whatever it is, also they need to also be aware of what is obtainable, what the new laws provide, so that they will not fall victim of Nigerians that feel they are too smart, they are smarter than other Nigerians to extort them, because government cannot be everywhere. Government needs to work with everybody to be able to have access to certain information. If government don't know that thing is happening, some kind of thing is happening in Balogun market, there is no way they will be able to find a lasting solution to those kind of things. So we need to encourage our market women also to speak out on what they face on daily basis in their workplaces or marketplaces for the government to come to intervene for them. Thank you.
Thank you. Thank you for that response, Opeyemi. I'm still seeing Oyemi's hand up. Oyemi, do you have another question, or it's the previous one, so we can move ahead?
Actually, should I set another question now? Now he's talking
Oh,
about I think the last question was talking about how the new tax law will actually affect market women and all of that. And now when Mr. Okoyemi was answering, he talked about the fact that they don't have to pay the informal tax collectors any longer. But then I think that is not the case. Yes, because I've had encounter with few market women, interactions rather, regarding the new tax policy. And then they made us realize or understand that the informal tax collectors are still going to keep collecting their money. They will still they'll still go ahead to collect their money, that they don't care about any of the new tax law policy or anything. Like they'll go ahead to collect it. So like I think I got the point that I need though. Mr. Kwemi now mentioned that if market women could speak out about these things, they could be helped, right? So I just want to be sure I'm not getting things wrong.
Sorry,
Yeah,
Opeyemi, sorry, before you
yes.
actually answer this response. So in line with what you just said, right? Aside from
Mm,
market women, we also have all these drivers, bus drivers, all these public transport drivers who pay daily uh, tax to some people. So does this, because I know that just like market women, they would have to that be exempted. So I want to understand how this also affects public transport drivers as well. Because I also know that they're all petty traders and petty businessmen and small business owners and all of that. Thank you. So
so
please, you can.
I think same thing is applicable to same thing is applicable to what the transport system that you just mentioned also. And I want to say this without without fear of contradiction, that most of the union that these market women, transport drivers belong to, most of them are actually sell out to their members. You see a lot of their leaders living large at the detriment of their members that are actually struggling to strive. I've found myself in some situation where the union will go and negotiate with certain bodies to say, okay, you can be collecting certain amount of money from our members and allow them to do this, so, and so. That is not recognized by the law. You understand? And in that case, we have, as Nigerians, we need to also have this mentality of the right thing need to be done. Is when you don't want to do the right thing now, that you start looking for ways to say, okay, how can I buy my way out of these things? And in that case, you cannot count that kind of attempt to buy your way out of certain issues as part of tax that you are paying to the government. No, some of this money don't get to the government. These are not taxes. Do you understand? These things you are talking about are not taxes. So I'm just saying that with absolute or proper understanding of these tax laws, you know the limit to. If somebody come and meet you and say you are paying so, it could be an internal arrangement between you and and your union. That is not tax. The statutory tax that somebody will need to pay grand rent, this one rent, different type of, and that's why I would advise that we all take this tax law, tax law, right? And read it. Read what are taxes, what is regards to as taxes in Nigeria. If you look at it from A to Z, you'll be able to understand that this is recognized as tax. These are not taxes. So what kind of payment are we paying in this regard? Those are different conversations. But for taxes, that is recognized by the law and is paid to the government of whether federal, state, or local government, is now going to be has now been harmonized in a way that you don't multiply, you don't pay multiple payments for one tax. Do you understand? So that's what I'm saying in essence, right? So, but some of those ones, it's when you are going to a union or you are belonging to an association, you agree to say, okay, we'll pay a certain amount of money for you to provide us with this one. And that also needs to be accounted for. Certain payment that we pay is not for saying we are paying to government to provide us road. We are paying this money for road for us to have access to certain. It might be for us to be a member of this particular organization, and these are dues that are paid daily. Those ones can be different kind of conversation and different understanding need to be gotten from there, because you need to speak with the people doing that to know why they actually pay that kind of money and what are they using that kind of money for before you say this is a tax, this is not a tax. I don't know if we get this explanation, but the tax, an average tax that is paid to government and not to an individual. Thank you.
Thank you, very much for that response. Okay, we have Noah Aderoju who has raised his hand.
Yeah,
Noah, please, you
yeah, good
have
afternoon.
2 minutes.
Oh,
Yes,
good morning, actually.
yes, 2 minutes.
Yeah, thank you very much, Speaker, for the explanation so far. It's really been nice, So, my question now is this: still leveraging on the informal sector that the last questioner asked. So now let's take for instance, there is this domestic help person. She works for an individual that maybe
No,
like a big
I'm
family.
not hearing you clearly, please. I'm not hearing you clearly.
Okay, is it better now? Can you hear me better now?
Yes, it's better now.
All right, so let's say there's a woman that works as a domestic help for a family. Now she gets like a certain amount of salary every month. Then whenever the family wants to get something outside or want to take care of something like within the house, they send her money to get it. And those are the inflow of money that comes into her account. Then she gets maybe like support from family members and things like that. Like different kind of money flows into the person's account. Now, and one thing I got by experience was that it is always self-declaration that is used to determine what the tax will be or something like that. Although I'm still not clear about that declaration at the time. So my question now is this: how do the NRS, what is the new tax body now, will determine that um, this amount of money is not taxable, judging that the person might not have somebody to help her do the whole declaration and all those things. Do you get my question?
Hello? Hello?
Hello, I said, did you get my question?
Yes, I got it.
All right.
So now, for a person, an informal person, for instance, so whoever works definitely have well, not everybody have a contract, but there will be an evidence that I work, this is the kind of work I do. And you will see, let's say in a month now, for instance, for within a year, from January to December, at every 24th or 25th, 26th of the month, there is an amount like 120,000 naira that enters my account, for instance, from a particular person. That is supposed to be my salary, right? But there are other money that comes into my account that is not salary, that is not income for me. If a tax officer look at it, for instance, look at your account and be like, oh, this person has over, let's say, 2 million naira coming to our account every month. At first glance, they'll be like, oh, this person is earning over 2 million naira. But because there's something we call reconciliation, right? At first, the tax officer might come up with a kind of interim tax position on that 2 million naira. But the moment you engage with the taxpayer and be like, okay, we saw the inflow of social amount of money, it's the responsibility of the taxpayer to explain that, oh, I only work as a chef with this particular family, and I earn 120,000 naira per month. But my bosses send me money to go to the market and purchase. That kind of explanation is understandable. They send certain amount of money to your account to purchase something, and they also see the way the money comes in and the way the money goes out. So it's clear. It's not just kind of argument. And to anybody that is earning 2 million, you see it from the person, the way the person look. You see, So, for instance, you are telling me now as a tax officer, or I'm telling you now as a tax officer that I earn 100,000 naira per month and I'm driving a Lamborghini. It's not the same, right? Then we'll now be like, okay, what's not the source of your other income? How do you sustain this lifestyle? But somebody that works as a chef, and you see that this person is living an average life from the person's purchases, you don't see somebody buying Louis Vuitton, or the person is coming for all this exercise, driving a Prado Jeep with police officer coming and telling me that he's earning 500,000 naira a month or something. There are different things that a tax authority look at. And some people have a 9-to-5 job. They also have businesses that they do. And that's why it's advisable that if you have a 9-to-5 job that you do and you want to have a business at the side, make sure that business is registered. Don't use your personal account to collect money for your other businesses. And also taking note that some people use individuals that are not informed for money laundering. where they send big amount of money to your account to launder certain amount of money. And that's why we need to be careful as Nigeria as regards to any money that you cannot explain the origin or what the money is meant for. Don't collect it into your account. Don't collect it into your account. Yes, they might not be able to, because actually the government is supposed to tax your profit, not your income self. They tax your profit. And now for personal people self, there's also a rebate, or is it a rent kind of allowance that they are giving to Nigerians now, that cannot be more than 500,000 or 20% of what your annual rent is all about. So before they calculate your tax, they will deduct that one first. So all those things will be deducted before they pay your salary to you. Your admin or your finance person in the office will do all those things for you without even. So all those things, you may not be aware of it because they don't consult you before they do all those things. But now people need to start asking questions. How do you calculate my tax? What are the deductions that you consider before you calculate my tax? All those things. They are normal questions that you have the right to get from your worker or employer, sorry, before they send you your tax. But all in all those things, they are not that complex as people are putting it out there. They will not just see money coming to your account and tax it. You need to. There is always an explanation to. There's always an explanation to every income, every inflow into an account. And if you are able to defend your income, your inflow very well, then you don't have a problem. But if somebody pay money into your account now, for instance, and say you should go and collect it in the cash and come and give it to me, that's suspicious. You should not even do that. Somebody is sending like 5 million naira into my account and say, please go to the bank and collect cash for me. You should not do that as a person. You need to have explanation for every money that passes through your account. And that's why proper record keeping is actually very important. You know, a year period is a long time. At the end of the year, when they want to do reconciliation, for instance, you might have forgotten what money was meant for on all of those. But if you keep proper record, it's just for you to check your documents and be like, okay, this particular document, money is for so and so and so and so. I mean, and then you are free. You only tax the ones that has to do with your income or your profit. And that's all.
Okay, so my main like point of concern exactly is this thing. At what point does that clarification and defending actually comes in? Because we are still using the premise that this person that is earning income is a domestic worker, and largely a lot of them are just not literate, a lot like that. So do these tax officers have to like come meet them, or do they have like one day that maybe towards the year end, everybody
Okay.
goes to like tax offices or go to their bank? And also another thing is this, because I live in an area where I come across a lot of these informal settings kind of work. So there are people that they work as domestic help, but they also work like care for care persons, for older persons, like maybe I work with a grandma and I help out cook and stuff like, but I help her manage. So the children are not here. So whatever the grandma needs per month, they just send me the money. I help her sort it out, as at least me, I'm up and going than the grandma that I'm taking care of. That kind of thing. So that kind of fund enters monthly, and it might not, none of the money is for me. It just passes through me to just get some things for that grandma and things like that. So when the money enters, I go out to withdraw it in cash. I am not paying transfer to buy the drug, to buy the food stuff, to buy anything. So that kind of explanation might not be on the bank statement. And you know, that kind of person is still not totally literate to the extent that I have like a book, like a record keeping book of things like that. Although it might be informal on our own side, like that. I don't know if you understand it about that kind of situation. So that is what I'm trying. So at what point does that explanation defending of income comes in? Do we have a date that we have an appointment with the tax officer, or we all go to the bank to clarify these things?
Okay. Let me inform us about something. Let me speak first of all with companies. First of all, for companies, and for individuals. So I think what we do now in Nigeria is self-assessment, right? So every month, a company, no, for company is every year, but for individual is every month now that you file your returns. Like every, for companies now, for employee, for instance, they deduct your tax before they pay your salary, right? It's the responsibility of your organization. They can choose to do it every month or quarterly, but I think the law is clear about frequency of filing. I think the law is clear about that. So it's the responsibility of the employer to file for all the employees under their employment. That, okay, Mr. A, Mr. B, Mr. C, this is their salary, and these are the deduction we deduct, and this is the tax we paid for this particular person this month for persons. But for company, it's annual that the company file their own returns of revenue. Okay, this year, 2024 or 5, our income was 75 million naira. We spent, so they file a detailed account, for instance, because usually as a business, you need to do an audited financial statement every year, right? That's why NRS give every company till, I think, the middle of the preceding year for them to file their return for the former year. I mean, this was the middle of the next year. For instance, the account of 2025 now, the FNRS give company till middle of 2026 to file it on their tax Promax. That's the platform now to file it. Okay, this is what we make in 2025. This is what we spend in 2025. This is what our profit was in 2025. And this is what we paid as tax in 2025. Do you understand? So now, like every 3 or 4 years now, there's something we call tax audit for company. The company will now come back, and the NRS will now come back to the company after like 3-4 years, sometimes 2 years, 3 years, depending on trigger. If they see any trigger that seems there is no compliance with this company, they'll come back and meet you and be like, we need to come and check your documents for the past 3 years that you've been paying taxes. Then they will now check the declaration that you declared that my revenue was 75 million naira. Is it true that your revenue was 75 million naira? They will have to check your bank statement. If you are a contractor, they will check for your contracts, letters, award letters, all those things. They will look at it. They will ascertain. If they discover undisclosed turnover, they will add it back. They will now ask you again, what is your cost of sales like? How do you purchase? What do you use? What are those things that you purchase to make this profit? You give them also, maybe I'm a contractor, I build houses, I buy cement, I buy this one, I buy that one. How many cement did you buy? You calculate everything, at what rate, you calculate what are the receipts. Do you have the receipts? If you have the receipt, you provide it, they check, they confirm. If they realize that you overstate your cost of sale, they reduce it, they will add it back. Your admin expenses that include salaries, rent, all those little money, they will ask you how much. They will ask for evidence. If you have it, your payroll, everything, they ask you. If you show them, if they are certified, they will allow. If they are not certified, they add back what is remaining. It's not the add back now that they not charge tax on for those periods that you've actually find yourself. They give you the opportunity to do your thing. Tell us how much you make. They don't need to check any document. Tell us how much you make. This is what we make. How much do you spend? How much are you paying you? Now you by yourself will declare those things. You understand? So now, after like 3-4 years, they come back and check all those things. Are they true? And that's what we call tax audit. You understand? But for individual also, your company that employ you now file for you. You will now come back and come and ask and be like, okay, no, after like, it depends on, that one doesn't have a timeline of like 3 years, 4 years. It could be, they can do it once in a year, depending on if they see any trigger. They will be like, oh, we need to audit this company, these people. They will now go there and audit. But if not, some people can even stay 10 years. There will not be tax audit. They will just pay what they have to pay and go and move ahead. Do you understand? But there need to be trigger for them to. So, but for those people now, the market women that doesn't have those kind of employer-employee now, is now their responsibility now, every month. There is a form that they give them, they qualify returns. They will now go to tax office and be like, okay, I want to file for my return. How much did you make in this month? I made this amount of money. But I pay transport to where I'm selling my things. I bought my goods to resell. So the profit margin is what they calculate The profit margin is what they calculate as your own profit as somebody that. So if, for instance, now 10 million naira enter my account, don't forget that inside that 10 million naira, as somebody that sell something by the roadside, I'm just giving an example. Somebody that sell vegetable now by the roadside will go to the farm, go and buy vegetable from farmer. Let's say you buy your vegetable for like 5,000. And at the end of the day, when you are going to the farm, you pay like, let's say 500 naira as transport to and fro. When you come back, you pay those people that used to help people to carry load, you pay them 200 naira. You calculate all those things, add it up to the 500,000 naira to calculate your profit margin. At the end of the day, let's say your profit margin is like 2,000 naira, that's your income per day. That 2,000 naira is actually your profit per day. That's on top of that 2,000 naira. If they are calculating this thing at all, which I know, most of these women will not be paying income tax again because their annual turnover will be less than 100 million naira. Do you understand? So because their annual income will be less than 100 million naira, there is no way you will tell me that someone that sells vegetable by the roadside will be making 100 million naira in turnover every year. It's not possible. So automatically they've been exempted from paying taxes. So almost all these people now that earns less than 100 million in a year will not be paying taxes again. So the issue of, but they need to file. So that one is statutory. Anybody, whether you make up to 100 million or you make less, so you must file statutory. If you don't file, you will pay penalty and interest. So that's where what is tricky about the only because they say we are not paying tax. What am I supposed to do in terms of you need to go? It's for record purpose. Okay, I made 2,000 naira in a day as profit. I make my revenue is, let's say 100 naira, I pay 10,000 today. Tomorrow, by the end of the month, my revenue is like that's like 90,000 naira in a month. So 90,000 as times 12 is less than, it's still less than 100. So you file it, you go there, they will help you. People are there to help you to say, Mama, how much do you make? I make 10,000 naira per day. They will help you fill it, everything. They will fill information for you. Just go to tax office, present yourself. You have your team. So it shows that you are compliant to the law. You understand? That's that. I think that's that about that. If I've actually touched your question.
Yes, thank you very much. Thank you very, very much for that. So now I get it very well.
Thank you, Ismail, for thank you, Mr. Opeyemi, for that. In fact, very robust explanation. You've taken us from understanding it, how we can be accountable, to how we can engage citizens, to how we can also hold the government to account. So it's quite robust and it was really enlightening. Thank you for all who asked questions, from Yahuza to Oyeyemi to Kemi and to Noah. Thank you so much for engaging and raising very important questions that help the facilitator to give us more clarity, to explain better on what we need to know about the new tax regime and how to engage best, and how best to engage with both the government and the citizens and ourselves too. And so the responsibility now falls back on us as journalists to take this back to the citizens on how best we understand it and what they also need to know, and who should pay tax, who should not pay the tax, why they should be exempted and how they are exempted, just help the citizens understand, have a clearer picture of all this. So thank you once again, Mr. Opeyemi. Thank you, Sheung, for being here and holding us here together. Thank you to the team. Thank you all for very active participation. It's at 11:53. We'll draw the curtain and call it a day. Thank you all once again. I'll see you next month with another very interesting topic and another very enlightened facilitator. So at this point, to call it a day, do have a great month and make sure you pay your tax. If your organization is not going to deduct it, please tell them to deduct your tax. Be a good citizen and pay your tax to the government. And then when you pay your tax, you have every right to hold the government to account. So please, see you all next month and do have a great day. Bye.
Thank you very much. You too have a good day.